Good morning, everybody. We'll be starting in just 1 second. All right, here we go. Share this, share that. Let's turn on the camera. Good morning, everybody. Good morning. Good morning. Let me turn on my little light here. All right. There we go. Good morning, everybody. Let me say good morning to everybody. And yes, I am wearing my Master Blaster of Disaster shirt. Thank you, PJ. Because I'm definitely the master blaster of many disasters. Jody, good morning. Omar, Chris, Arnulfo, Vertuvian, Tim, Steve, David, Stacy, Tom, Devin, Kirk, Glenn, Art, Jeff, Robert, Rice, Rebecca, Dr. Serena, good morning to you. My actuaries here: Ivano, Beamclay, Stan, Peter, Dave, Mark, Keith, Lewis, Wade, Lydia, Duzzy, Jesse, the Sassy Trainer, Walter, Ruth, Sassy Trainer. We got to change your name to the Sassy Trader. We got to do it. You got to become the Sassy Trader. Walter, Ruth, Mike, John, Blair, Henry. We got Henry in the house. We got Harold. We got Bill. We got Dave. We got Rochelle. We got Delroy. We got Jason. We got Kevin. Good morning, Kevin from Carlsbad. We got Clyde, Eduardo. We got a lot of people here. Let me just go back up so I don't miss anybody. Eduardo, Nathan. Good morning, Nathan. Jean. Good morning, Jean. Robert, Scotty, Jeff. Good morning. Yes, the master blaster of disaster. Richard, good morning to you. Hope things are good up north. It's a little humid and hot here. We got Brian, Carlos. Good morning, Carlos. Stephen, JB, Jill, Don, Michael, Ricky, Robert. Good morning, Robert. Good morning. Thank you, Robert, for all the help. I do appreciate it. Malik, Robert, Stephen, Sherman. We got, sorry, this guy, I got a lot of people here. It's going by fast. Karen, good morning, Karen. Cam, good morning, Cam. Graham. Thank you, Dr. Serena. We got 200 people in 2 minutes. I love that. Dave, Michael, William. Good morning, William. Oh, Willard. Sorry, Willard, not William. Willard. Brian, stick may go up with the intro of Switch today. Maybe. Rick, William. Good morning, William from South Florida. Rochelle. Sorry about that, Rochelle. Deanna, Murray. Good morning, Murray. Good morning, Deanna. Philip, Carlos. You called it out yesterday. I'll bid the market pricing. You got the edge. Yeah. Uh, Dr. Serena. Dr. Serena, Rosalind, Richard, cold and raining. Ugh, yay, yay. Samson, Ralph, Tony. Good morning, everybody. Good morning, and welcome. Welcome to the morning show. I know we are here a little bit early, but it's for the best. So I have a question for all of you guys. What asset I got a good trivia question for you guys, and I want you to think long and hard about this. What asset is going to be allegedly the most impacted by the Liberation Day, whatever the hell you want to call it, announcement today? Does anybody know? Can anybody tell me? It's a quiz. Good morning, Christian, Patrick. Good morning, CJ, Vernon. Good morning, everybody. Happy hump day. I'll be working from home today. Matt has some bug. We don't know if it's COVID yet. He got tested yesterday. He's going to find out today if he has a flu, bug. I don't know what the hell he's got. But he got something at the hospital while he was there with his wife. So he's working, but he's from home. Can anybody tell me what asset? I didn't say what industry. I said what asset. I gave you a clue. Harold says gold, bonds, trucking, bonds, steel, gold. So far, nobody's got it right. Nope. See, I always ask questions to try to get you guys. 25 degrees in Utah. Oh, yeah, yeah. No, not Vicks, not alcohol. Steven, I like that. Alcohol. That's a good answer. No, no, no. COVID and no, no, you're right, Marie. Not good at all. Bonds, gold. No. All of you got it wrong. Yes. Somebody got it right. Nope. Nope. Victor got it right. No, the US dollar, silly you silly gooses. The asset that's impacted the most by this trade war is the US dollar. Yes, my sanity. That alcohol, my sanity, yes, Liberation Day. No, it's the US dollar, folks. It's the US dollar. This is the asset that's being impacted the most by what's happening today. Because this is the asset that regulates the cost of imports and exports, which are taking priority right now. So, first off, you learned something new. You've only been here for 6 minutes. You've already learned something new. The asset that's the most impacted because of tariffs happens to be the US dollar. The US dollar. It also happened, the US dollar is also one of the hardest assets to manipulate because it's so darn big. It's one of the biggest assets in the world. So, but this is the asset. This is the asset that we're going to be paying attention to today or tonight. Okay. And we're going to be looking at the US futures and we're going to be looking at the US dollar versus euro. And I'll be updating you tonight on that. Good morning, Richard from Puente Gorda. Eagle, yes, the dollar. Somebody had it before you. Victor. Victor was the first. Victor Diaz, come on down. You were the first one to get it right. I always give credit to people who are the first. Victor actually got it right. But yes, you're right, Eagle Beagle. The U.S. dollar. The U.S. dollar. Well, Rochelle, it's funny that you mentioned that. So my son, I don't know if I told you guys or not, but my son got accepted to. This is a funny story that's completely related to what we're going to be talking about right now. So just bear with me. So a few months back, my son got accepted to a Australian a vet school. He wants to be a vet. And now, from what I understand, his girlfriend, they've been together forever, for 4 years. They're probably going to end up getting married, but that's not here nor there. She's also going to go with him. But here's the funny thing. So a few months back, he got an email, acceptance email. And I'm talking about Australian, about the Australian dollar right now, actually, which is a funny side story. So the email landed in his spam folder and he didn't see the email for a month. And remember, Australia is on a different calendar. They're on a different school calendar. So he decided to accept the offer. The day he accepted the offer, they told him that you're too late. We filled up the last spot. He was crushed. He was really, really crushed. So he applied again, and he just got his acceptance letter again 2 days ago. So he is going to go. But my point is, Rochelle, Australia, one of the reasons why I encouraged him to go to the school is, well, I think Australia is really cool. But more importantly, the Australian dollar is one of the lowest values it's been in a very, very long. Yeah, vet for kangaroos. Isn't that funny? It would make sense. He's going, Rochelle. But one of the reasons that I made the decision, and one of the reasons, I mean, I try not to make decisions for my kids. My kids have always made decisions for themselves. I always made decisions for myself ever since I was a little kid. It teaches you to be independent, but I really encouraged him to do it. And one of the reasons why I encouraged him to do it, aside from the fact that it's one of the top 10 schools in the world or 20 schools in the world, was the fact that the Australian dollar, Rochelle, yeah, he was devastated. Yeah, he was. But now he's going to go. He got accepted. It's all good now. He's going to end up going, Richard. He's going to end up going. But my point is, one of the reasons why I'm really pushing him to do it, have you guys seen the value of the Australian dollar? It's very, very low right now. And I'm actually thinking of investing for putting some in my account, like long-term investment, not trading, long-term investment. So I had dinner with Chuck Hughes. You guys all know Chuck Hughes. I had I will, Graham. Thank you very much. He's going to Quinlan College of Medicine. I didn't know you were Australian, but that's good to know. Thank you very much. I'm very happy for him too. He's a great kid. My son has always been he's never been a troublemaker. Never caused me any trouble, never had any of that teenage crap. But my point is, I was having dinner with Chuck Hughes, and Chuck was also encouraging me. They have Chuck goes to Australia a lot. They have a condo there, and yeah, we'll talk. If you guys want to help me out or add something, please let me know because I don't know. I have relatives in Australia that also happen to be vets, but I haven't seen them or talked to them in 45 years. So if you guys can help me anyway, please let me know. But he's starting in January. My wife will be going with him probably in November or December to help him settle there. It's the Quinlan College of I can't pronounce it right, Quinlan College of Medicine. But anyway, I'm very proud of him. But my point was not talking about my son. I wasn't even going to plan on talking about it. I wanted to bring up the Australian dollar. A lot of savvy folks are putting their money in the Australian dollar. Okay, Rochelle. So it may not be such a bad idea. Did you know kangaroos can prolong the air? No, I had no idea. But I figured going to Australia to learn veterinary medicine is probably one of the best places in the world. God knows they got so many places there, right? Yeah, yeah. So anyway, Australian dollar, an asset you guys should be looking at. Maybe looking at the Australian dollar ETF. I'll give you ticker symbols for that in the VIP room today at noon if you ask me nicely. So anyhow, that's the deal with my son. He got accepted. He's going to be going to Australia for 4 years. Uh, and the Australian dollar is 50% discount. So everything via Australia right now for us Americans is very, very cheap, and it may be a good time to invest in the Australian dollar. I'll stop there. I won't bore you anymore. Okay, let's talk about the U.S. dollar. Keep an eye on the futures. On the futures, and I'll give you the asset. We'll have the play-by-play this afternoon. I'll be engaged with you guys, but please keep an eye on the U.S. dollar and keep an eye on whether it starts going towards the 200-day moving average or coming down, because right now we're still in this range, this shadowy area. We're still in this shadowy area, and this structure has not been broken. I believe this structure will begin to break after the announcement because we'll see price discovery. Sorry, Rochelle. I'm sorry to hear that. Sorry to hear that, Rochelle. We are all very nice with you. Please give us. I do, Kanaka. I do. I try to give as much as possible. Spent a month in Queensland last year. This time, great time. Yeah, I heard it's very safe. I've only heard like the best things about it. All our friends and medical professionals are saying it's a great idea for him. Gold. Gold is consolidating. Folks, I think gold is a little overextended. My suggestion is I would wait for gold to drop to the 3,085 level. And if you're in gold assets right now, you may consider taking profit just till this area right here starts coming back in line with this. So we're right now at about 31.48. I'm only suggesting we wait for gold to be down about 100 points. Also, I believe gold will have a huge impact. Gold will have a huge impact on today's announcement. It's obviously a very important asset, so we'll have to keep an eye on that. Bond market. Yes, bond market is now going to this level. Now remember, I drew this line for you, and yes, the bond market will be impacted, but not nearly as much as the US dollar. Why? Because the bond market is not a global trade asset. The US dollar is a global trade asset. Keep your eye on the bond market. We're at resistance right now. If we break this resistance, we still have the 200-day moving average, but I'm curious to see what will happen. I'm also of mind that the market will be very muted today because everybody's in a wait and see mode. This market muting has not really impacted us too much in the last couple of weeks. It's impacted us in our swing trading programs more so the last month. We were wise to slow things down. It was a very good decision. Now we're starting to speed back up. But what it's impacting right now is the Trading Zone Live, my day trading program, because because markets are trading overnight, and then by the time the morning happens, basically nothing happens till the end of the day, and that's really jerking me around. We have to be patient. We have to be patient. We had a really good 6 months of trading it, and all of a sudden, Murphy's Law never fails. It just never fails me. It follows me. It followed me everywhere except the pit. I didn't have that in the pit. I had it in around Christmas a year and a half ago in the pit, where we just couldn't find a good trade no matter what. Same thing is happening here. Please be patient. Matt and I are doing everything possible to bring you winners, and I intend to make Trading Zone Live my #1 program within the next 3-4 months. So just be patient. Please be patient. We're doing everything possible to get you guys in there. You took profit on 10 contracts yesterday. I'm so happy to hear that, Rochelle. Very, very good. Very, very good. All right. China. China is doing nothing. We're in a wait and see mode with China. And I guess this is kind of where we're at with the US dollar. You could see right now, we're really not, it's a wait and see mode. Remember, folks, you may want to write this down. You may want to write this down. Bonds get their directional bias from currencies. Stocks get directional bias from the bond market. So if currencies don't move, bonds don't move. If bonds don't move, stocks don't move. It's very important. Hey, Santiago, good morning to you. It's very important that you guys understand that. It's very important that you guys understand the structure of the market. Currencies give volatility to the bond market. The bond market gives volatility to the stock market. It doesn't work any other way. That's one of the reasons why we look at currencies, and that's one of the reasons why we look at bonds. And right now, bonds are very highly correlated with stocks to begin with. Okay. Yeah, good job, Rochelle. Better job than I did. Better job than Matt and I did yesterday. So not much happening here. But what I will show you is this. We have a descending triangle building here. Typically, descending triangles break to the downside. Thank you, Dr. Serena. Thank you. Great job. Thank you all. Oh, shoot. I forgot to give you, I totally forgot. I forgot about CTAs, like they didn't exist. All right. Alpha Zone Pro at 10 a.m. today. We're going to have another session. Here's the link for that if you missed it. How does the import-export balance affect the U.S. dollar? By regulating the price of the U.S. dollar depending on whether imports get heavier or. So, for example, if Trump raises, if we see tariffs, reciprocal tariffs from other nations, that weakens the dollar. If we see less reciprocal tariffs from other nations, that strengthens the dollar. It's the relationship between Michael. It's the relationship between the import-export control. Oh, gold. Good for you, Rochelle. Good for you. Good for you. Good for you. Very good for you, actually. Here's my VIP room. I have a very, very big agenda today in the VIP room. Let me tell you what my agenda is. My agenda in the VIP room today is I'm going to do basic principles of technical analysis. A lot of you folks are missing very, very basic principles of price action. I'm going to talk about basic principles of gaps. A lot of you don't understand how gaps work and what gaps create. And too many of you have been reading the fill the gap nonsense. I'm going to explain to you the gaps. And then I want to do the 20 sectors, which we didn't do yesterday. I'm also going to be looking for some bear put spreads because I think volatility is going to rise and certain assets have bottomed out. I'll talk about that in the VIP room today. And again, here is the link for that. And finally, let me give you the most important link: Customer Service Live, the Cam and Gustavo show. You've got answers, they've got questions. How do I prior VIP webinars? I just posted a link for you, Isaac. How do you look at prior VIP webinars? You go to my YouTube channel. Here, I'll show you real quick. Look. Here, you go to YouTube. Look, You go to Roger Scott right here. You see I have live right here. Oops, sorry, wrong tab. You click this, my ugly mug, and you go to the live tab right here. And I'll post it for you guys right now. And this records all of them. Look, yesterday, mornings, afternoons, mornings, afternoons, mornings, afternoons, mornings, afternoons. Okay. Yeah, we had 1.2 thousand, 1.3 thousand, 1.7 thousand. The pre-morning show, we had 1.7 thousand yesterday. We get a lot of people here. Let me post that for you guys. Let me post that for you guys here. There you go. I'll post it for you guys, and you can watch it all you want. There it goes. We get a lot of watches. We get a lot of, like I said, we had 1.7 thousand people look at yesterday's. We usually get between 1.3 and 1.4 thousand, about 1,400 people as the day goes on. I'll talk about all that. I'll talk about XLK. Give me a minute. So we're in a descending triangle. This looks like it could have topped out unless we see something new on China. We could be seeing some downside, which is not really helpful for the US. What about crypto? Well, cryptos are consolidating. They're still in this area, but they tend to be holding on better than stocks right now because there's less international trade mumbo jumbo with them and there's more clarity. If I see more upside, it looks like they're doing exactly what the mega caps are doing. Our Picasso drawing, which I'll show you in a minute. Date recorded on them. Sorry, Charlie, they don't want to do that. I don't know why, but you can just click on it and it'll tell you the date immediately right here. The date is right here. And there's two every day, the VIP room and the morning show. Yeah. All right. All right. So Bitcoin is just kind of choppy waiting right now. Implied volatility, what is that doing? It's right now in a wait and see mode. The levels we want to watch on implied volatility, and I hope to God you guys are writing this down. The levels you guys want to watch on implied volatility are 24 and a half and 21 and a half. 24 and a half and 21 and a half. The key level, honestly, is 20, but I'll take 21 and a half. We are right now, as long as volatility is at 23. And by the way, remember when I did my year ahead preview? I told you that volatility is going to start rising in January. When I did the year ahead, I told you we're going to have some bumpy roads with volatility. And I also lowered my S&P 500 end of year to 5,200. Since then, both Morgan Stanley and Goldman Sachs have revised their levels to 5,200, which equals my level, except I did it 4 months earlier before them. Just, you guys remember? Not 4 months ago. Let's see. January, February, March, April. Yeah, three and a half, 4 months ago. So we were ahead of Goldman Sachs and Morgan Stanley by 3.5 months. So the levels you're going to watch on volatility is 24 and a half and 21 and a half. Let's talk about the news, and then we'll get deeper into our analysis. 6,200, excuse me. Thank you, Jeff. 6,200. Thank you. I'm thinking 5,200, 6,200. All right. Markets are a little bit lower. They're a little bit lower. When I say a little bit lower, I mean 214 points on the NASDAQ and 259 points on the Dow. Now, the Dow, 258 points really isn't much. But for the NASDAQ being down 200 points, that's equivalent to the Dow being down about 350, 400 points, which is substantial. And yes, I'll talk about the technicals in a few minutes. And please don't say I did not warn you that this may happen. And again, this doesn't really mean much because volatility has been really, really high. And volatility being really, really high means there's a lot of movement right now. Exactly right, Jeff. Yeah. I was thinking of the same thing after you said it. Yeah, we may be at 5,200 by the time it's all over. So we are moving lower. I'll talk about technicals in a minute. Don't go anywhere. We're just getting started, folks. And remember, I don't have to be anywhere today. I'm working from home, so I'll be here the entire day with my master blaster of disaster T-shirt that PJ got me. Thank you, PJ, once again. I appreciate it. Great shirt. I'm going to wear this all the time. Um, all right. So not a good start. Not a good start. But I will say this, volatility is not really reacting all that much. It's only up 7%. So the markets are starting to get used to a little bit of volatility. Let's see what's driving price. President Trump's sweeping tariff announcement. President Trump has announced reciprocal tariff plan at his event at White House. I'll be updating you via Telegram on this precipitously. I'll talk about non-farm payroll and all that other stuff in a minute. Tuesday, that reciprocal tariffs will become effective immediately, and we'll find out what's what, and hopefully that will be the end of that. Main index were mixed. Tesla rose 3%. Wells Fargo added the stock to its tactical idea list. Why they're doing that, I have absolutely no idea. There's absolutely nothing about the stock that anybody wants right now till he's done with till he gets out of Dodge. He's got to get out of Dodge first, right, guys? When he gets out of Dodge, then things should go back to normal. He's got to separate his company from politics. I think he picked the wrong side. Most of his buyers are left, not right. But what do I know about that? Let the trade war begin, right, Carlos? Exactly. CrowdStrike. So we got a little bit of a bump from CrowdStrike. We got a little bit of a bump from Tesla, although I wouldn't be holding my breath till he gets out of Dodge. He's got to get out of Dodge, folks. Johnson Johnson isn't doing anybody any favors. I did not initiate that trade. I loved it 2 days ago, but I don't like it now. It's got fundamentals. Fundamentals always supersede technicals. The jobs opening report was weaker than expected. Not good. I have not the same results for indices futures prices, although display the same page. I have not the same results. You don't have these same results? Here, go to this page. Here, Omar, go here. This is the page I'm at right now. This is where I'm at right now. Make sure you go to indices, U.S. indices right here. I just gave you the link. You can literally go to that page and see everything that I'm seeing in real time, just like I'm seeing it. The page has been posted. Let's continue. We got a lot to talk about today. Johnson Johnson's not doing well. And Merck, by the way, wasn't doing us any favors yesterday either. Labor market jolts didn't do well. ISM manufacturing fell to a 4-month low. Not good for the U.S. dollar. ISM index hit a 2.75 high, stronger than expected. Weird, really weird. March global manufacturing was revised upwards. Construction spending stronger than expected. So the news was kind of mixed. Fed President Barkin stated on Tuesday that President Trump's tariffs could drive up inflation and unemployment. Yeah, but you already knew that. You lowered rates after he was elected the second time, after he already told us exactly what he was going to do. And I told you guys they're going to point the finger at President Trump, and they're doing exactly that. You knew. If I knew, and I was telling everybody this in real time, you knew it. But you didn't listen to anything I was saying. I was telling you. He's telling you not to do it. I'm telling you don't do it. You know we're going to have inflationary. What are you lowering rates again? Why are you trying to be a political bitch? Don't do it. But he did it, and now he's pointing the finger at Trump. I told you it was going to happen. Barkin noted the tariffs-driven price could lead to a cage match. Yeah, but why didn't you say that 3 months ago? Like, we knew all this. Between consumers willing to pay more and goods and services provided who really believe they must pass on increase. Richmond Federer said, if you're a company that can't raise prices, then your margins go down. Yes, but you knew all this 3 months ago. Morons. You're going to start working on operational efficiencies, and that means headcount. Really? You think? No. He's reinventing the world for us right here, folks. Where the Trump joke will end, how come it happened to you guys, U.S. against the world, who is going to win? I don't know. I'm just reading this. I'm just trying to read this and comment on the Fed. Chicago Fed President Goolsbee cautioned about the adverse effects of any pullback in consumer spending from tariff-related uncertainty. Just what I told you. They're going to do exactly that. They're going to do what they're going to do, and then they're going to point the finger at Trump. You knew he was going to do this. You lowered interest rates after he was elected, you morons. As he was saying, I'm going to do this, I'm going to do this, I'm going to do, as we were saying, why are you lowering rates right before we're about to have inflation? If I knew about it, don't you think they knew about it? They didn't care. They didn't care. They didn't care. If the consumer stops spending, don't want to, just nonsense, morons. We have a 100% chance that we're going to have no rate hikes, not 85, 150% chance. There is not going to be any rate adjustment, folks. And if we have one this year, we'll be lucky to see it, or maybe two, depending on how bad this tariff happens. They pulled the most negative things, Goolsby said in the interview, bias. Of course, but what do you think, Jeff? How about this, Jeff? How about every time they mention tariffs, they don't say US tariffs. How about they say President Trump's tariffs? Have you noticed that too? It's always President Trump sweeping tariffs. Notice it's not US tariffs, it's President Trump sweeping tariffs. Have you noticed that too? I've noticed it every time. Why not just say tariffs? Why are you saying President Trump's tariffs? Every time, every time, every time. It's called inflammatory language. Um, ADP non-farm employment data, which is set to release in a couple of hours. Economists on average forced the March ADP. That's coming out. Let's see what the number is. If anything's out already, we'll take a quick look-see here. 155. Let's see how the market is reacting to this, okay? This is how the market is reacting to this. Bond market going up, breakdown in SMH. That's how the market's reacting to it. Let's see if our Picasso drawing is still intact. Let's look at daily. So, and I'll talk about this more. I know we're kind of on the topic, and I know we're seeing a lot of volatility, but folks, we have a pivot here now. And even we can come all the way down to this low and consolidate. But as long as we don't break this low, we don't create a pivot here, you see? So don't put too much faith into this bar till the market opens, until you see whether we're breaking the low or breaking the high. Because this drawing is still telling us we're going higher, even though right now price is down. We're just here. We haven't broken down yet. To break this, we have to go to 553. Let's keep reading it. But so far, this news is not giving the market any kind of a boost. Yeah, but they were expecting 155. Whew. That means employment is strong. They could lower rates. By the way, which is what's happening right now. Look, the report was really good. Interest rates are going down. Remember, bonds going up means interest rates are going down. We're almost at the 200-day line, by the way. Remember, I told you remember we got a lot of resistance here. Yeah, better than expected. Tells us that that the Fed has a license to keep doing what they're doing. Crude oil inventories are going to be released later today. Europe, okay, this is important. Down 57, not down 2%, down only 0.57 this morning. And remember something else, folks. I think the market is going to be more muted than we're seeing right now pre-open, because there's going to be way too much speculation on what's going to happen overnight. Okay? Let me give you some links too, by the way. Today at 10 a.m., I'll be having a class. I'll be doing it from here. VIP room at noon. And customer service live The Cam and Gustavo show. Let me do that. Gustavo, where are the kids going for their honeymoon? I don't know. I didn't see you here, Gustavo, but if you're here, just say hello and let me know where the kids are going for their honeymoon. Gustavo's son just got married. So, healthcare stocks were amongst the biggest losers. I should have shorted that Merck yesterday when I saw it. But nothing crazy. Again, U.S. President Trump's tariffs, not U.S. tariffs, U.S. President Trump's tariffs. Every time they stick it to him, every time. That's fine. It's China closed just about the flat line as cautious sentiment prevailed ahead. Cautious sentiment. Announcement: bank stocks outperformed. Since taking office in January, Trump has already imposed 20% tariffs. In March, responded with retaliatory tariffs. Japan closed a volatile session higher as investors nervously awaited Trump's tariffs. Again, Donald Trump's tariffs announcement. Heavy industrial and video game stocks led to gains on Wednesday. The benchmark index opened higher, then dropped to its lowest level since September 11th. A lot of volatility before closing the session with modest gains. So a lot of volatility, but not a lot of movement. A lot of volatility, but not a lot of movement. As far as stocks to watch today, Schwab and Paramount. I really like the stock. I'm cheering for this company to be taken over by a larger company, like Apple. I'd love to see a merger with Apple that's bleeding money. Their service is good, but they're bleeding money. And I think it would be really nice to see either a Netflix merger, a Prime merger, or a basically, I think this company is going to be bought out in the future. I really do. They're not really. They're positioned in a very unique way. I personally would love to see a merger with Netflix. I think that would be so smart. Ray says possibly because all the tariffs are being executive orders, not by executive order. Yes. Yes. In Europe. Good, Gustavo. Good. Okay, let's talk technicals. First of all, before I talk technicals, I just want you, their closest partner is Prime. Yeah. That would be my first guess, Jeff. That would be my first guess. So, first thing I want to talk to you guys about, before I get into technicals. Folks, I've been talking a lot about tariffs. And hopefully after today, I won't be talking as much about tariffs. Now, I want to just remind you of something. This entire time that I've been talking about tariffs, which started right when President Trump got elected, I have never one time on this show expressed my like or dislike about any specific tariff or anything specifically. I've never told you that I feel this car tariff is going to do this, or I've never once got specific about tariffs here. Not once. Not one time. And I know that a lot of you are here every single day. I'm watching that show, Carlos, loving it. So loving that show, loving it. So I've never once talked about anything specific about tariffs. The only discussions I've had with you is what kind of an impact will tariffs have on the overall market. I've never discussed whether I like tariffs, whether I dislike tariffs, specifically how they will impact what company, how they will not impact the company. Have you ever thought about it? I've never once talked about tariffs specifically. I've never broken down any specific tariff. I never imputed any tariff to any company. Have I not? So a lot of you, every time I mention the word tariff, the word I hear is stop talking about politics. No, folks, I'm not talking about politics. It just happens to be that politics are sticking their nose into my business, which is financials. With that said, I've never once said I like a certain tariff. I never once said I don't like a certain tariff. As a matter of fact, I've never once talked about tariffs specifically. Not one time. Can somebody say otherwise? This entire time, I've never talked about one specific tariffs, even though I mentioned the word tariffs 1,000 times. Have you noticed that? Do you know why? Because I couldn't give a rat's ass about these tariffs. I care about certainty. And that has nothing to do with politics. That has to do with the stock market. So for all of you folks who don't like what I've been saying the last couple of months, I just want to bring up something to your attention. I've never once talked about a specific tariff, about a specific plan, a specific agenda, a specific policy. You have no idea how I feel about tariffs at all. None of you do, because I've never said it and I've never mentioned it. But somehow some of you have thought I've been talking about politics. But isn't it interesting that I've never once talked about any specific tariffs in 2 months? I've talked about how it impacts the market. And that, my friends, is not political. That, my friends, is financial. Okay? Yeah, Val Kilmer. Oh, Richard Chamberlain? I didn't know that. I thought just Val Kilmer. I didn't know Richard Chamberlain died. You have been absolutely neutral on tariffs, but always talking about certainty. Yeah. Yep. I've never one time, you guys have no idea how I feel about Biden, how I feel about Trump, how I feel about him you have no idea because I've never talked about it. But somehow people feel like I'm getting political in here because I mentioned the word tariffs. Well, folks, now you all know why I'm mentioning the word tariffs, because they're impacting our market. How I feel about tariffs, you will never know. You know why? Because I don't bring my personal politics into this. And frankly, I'm not political and I can't stand it. One way or the other, I just don't like politics. So please, next time you hear me saying something that's triggering you, think about the fact that I've never once talked about how I feel about any tariffs, good or bad, only in the regards of how it's impacting the market. Pay attention to how the things coming out of my mouth. Somebody brought that up to my attention. They're like, Roger, you've never once mentioned any specific tariff. Not one time have you're here 2 hours a day and you've never once mentioned one specific tariff. Have you noticed that? I don't talk politics, okay? Exactly. I didn't know. Murray, I did not know. I did not know Richard Chamberlain died. I'm going to have to watch that show what's that show he did in like 40 years ago? Shogun. I'm going to have to watch Shogun again. You never ever on political. We all know. But you be surprised. People, I'm getting letter. Stop talking politics. Stop talking politics. So exactly, Carlos. So my point is, don't rope me in just because I say something you don't want to hear. Don't rope me into your political discussions because I'm not political. I hate politics. I hate politics. Uh, A or B, I hate politics. I am the most non-political guy in the world, and the only time I talk about tariffs is their impact on the market. So please stop throwing that whole political discussion in my face, okay? All right, let's talk about the stock market and let me give you guys key levels. All right, so SPY. So far, I don't like what I'm seeing. We're having an inside day. If I know the market, if institutions are going to trade the way I'm going to trade, they're not going to do a lot of directional bias today because we have absolutely no idea what's going to happen at 4 o'clock. Again, we don't have a lot of certainty. I don't know what's going to happen, and I don't care. I don't care. I honestly don't care. I know you don't believe me, but I really don't care. I just want it to happen so we can move forward to the next page. I just want to flip the page. That's all I want to do. Um, and I'm hoping the levels that I'm hoping we will see today, guys, we're going to see a lot of volatility. We're going to see a lot of repositioning. We're going to see a lot of repositioning. Cardinal was left on his spirits. What is the average time a broker required before moving from tier 1 to tier 2? Um, um, Jan, you can always email me a question. If there's something like that, you can always email me. I'll try to answer you. I've only mentioned how you just want to make a decision. Exactly, Steve. Thank you for actually listening to me. Yes, that's all I've said. I don't get into politics. When T-Bus talks to me about politics, I'm always like, yeah. Ask T-Bus how often I talk about politics. He's like, never. So the level we want to see today, folks. Now, I'm going to be very nice about the market. I want this bar, this red bar, to trade right here. Let me try to see if I can blow this up a little bit. See this right here, this area right. Why can't it? It's too small, I guess. Right here. See this area right here? I want this bar to trade up here in this area. I don't want this bar to trade in this area. I know it's a little small, so it's hard for you guys to see maybe. I have my full screen on, but I'm hoping if you guys are on the full screen, you could see it. So you see how this part of the wick versus this part of the wick? We want today, this is just the overnight session. This means nothing. This means nothing right now. Okay. But what I want to see is this. I want the low to be above this bar, and I want the majority of the trading action today to be up here. Up here. It doesn't necessarily have to take out the high. It doesn't even have to violate the 8-day EMA. I'm giving the market very little to do today, okay? Yes, ideally, Helen, ideally that's what we want, but I'm giving you the bare minimum. Ideally, I want this to bolt higher and start, coming up and this to be the low. That would be great because then we are making higher lows, right? Low, lower high, lower low. I mean, high, lowest low, higher low, higher low. But what I'm saying is I'm giving you like I'm giving you the worst case bullish scenario. So what I'd really want is I'd want to see this today. I want to see trade right here. The cherry on top would be a real strong rally at the end of the day, taking us higher. But I'm willing to take anything around here. I don't want us trading around here. And the worst thing that can happen is us breaking the low, because that would put less faith in our Picasso drawing, that our Picasso drawing is working out. Okay, so let's look at mega caps. Mega cap, same thing. I don't want price to break the low. I don't really care even if it sits here. I want price action to look like this today. I don't want it to go lower. So if we bottom out at the morning like this and start coming up, I'm okay with that. What I don't want to see is us trade right here. Capiche? Basically, folks, what I don't want to see is this. Here, let me show you what I don't want to see. I know I'm getting really deep into this, and because today this is really important. So here, curses. Let me draw a picture for you. Here, what we don't want to see, what we don't want to see is this. This is daily charts. What I want to see is this. Does everybody understand? Does everybody understand what I'm saying? And the more likelihood we will see this if this doesn't go much lower. The lower this goes, the less odds we will see this. If we break this, there's even less odds that we see this. If we start going down and threatening this area, my Picasso picture becomes worth $1. You see what I'm saying? But if we start going higher, or at least sitting here, we're okay. Roger, is what you're saying only applicable to the mega caps? No, it's applying to everything. Look at QQQ. Why can't I? Okay, here we go. See, I don't want us breaking into here. I want this to continue moving higher. I want this to be the low. Now, if this is the low today, this is the 5-minute chart. If this is the low today, then this is the low, which means we're making higher highs. I don't want this broken. So what I want you to do is thank you, Dr. Serena. What I want you to do is, yes, higher high, not higher lows. Exactly, Pops. But a lot of folks don't, I want to make sure it's clear. So I want to see that across the board. Let's look at SMH. Same thing with SMH. See how my rectangle still hasn't broken this area, how it's just kind of holding there? So if this is the low, we can live with that. We can live with that. We are seeing a lot more volatility now. We could live with this. But if we break this down and go lower, it ain't going to be pretty. It ain't going to be pretty. Okay? It ain't going to be pretty at all. So again, just pointing this out where we're at right now. What about equal weighted SPY? Equal weighted SPY is looking beautiful. Look, even though it's low now, look where the low is. The low is here. This is how we want the QQQ to look today. This is how we want the broad market to look today. We could see just by looking at this that there's a lot more pressure on technology than there is blue chips. Is that true? Let's take a look. Let's look at our sectors. Let's see if we have fragmentation, shall we? Well, you don't have to be an Einstein to figure it out. Look at all the sectors that are leading. We have complete congruency here. Remember few days ago, it was completely upside down and backwards. Well, the market's been consolidating, right? What happens when the market consolidates? It straightens each other out. So what do we have now? We have a complete balance. The problem is this balance doesn't favor the technology. This favors favoring blue chips. Consumer staples and utilities are the two most defensive sectors. When they lead, that's not good. By the way, notice something interesting. We have congruency, consumer discretionary, communication, Bitcoin, Russell 2000, QQQ, technology, semiconductors. Picture perfect. What does this mean? That means the market is balanced. That means the market's not all over the place. That means the market can really move. What is that? Why, Roger? Well, when you have consumer discretionary up here and you have communication services down here, one is going up, one is going down. What does that do? What happens when everything is firing together in one? The problem is they're all firing together to the downside right now, but we have congruency. We have congruency. This is what a congruent market looks like. Let me show you a week ago. Communication, consumer discretionary, look where semiconductors are. Look where financials are, and look where consumer staples are. But look where semiconductors is. Look where Russell 2000 is. That's a week ago. Look at it right now. Perfect. This is a perfect picture right here. The only thing that's not looking good is Q Russell 2000 and mid caps, but it's not a big deal. The truth is, this really tells you how everything is laid out. This tells you how everything is laid out. The only thing there's a couple of things off here, but very little. For the most part, we have congruency. When you have congruency, it means markets can go higher. Says once for it all, tariffs, will the market price it? Assuming he makes up his mind and we're done with it and we can move forward, we have to start. The market cannot heal, folks. The market cannot heal. Okay, look, let me explain it to you, Tiago. You go to the hospital with a sprain, okay? They say to you, if you stay off your leg, you'll heal in 20 days. You get a phone call that says, you gotta be somewhere in 20 minutes. It's a matter of life and death. You go walking on that leg, you come back to the hospital, the doctor's like, well, it was 20 days, but now it's 30 days. Then somebody you piss off your neighbor next to you in the bed in your bed, and he comes in the middle of the night and he hits your leg with a hammer. The doctor looks at it the next day and says, well, now it's 40 days. You go to the doctor, you told me it was going to be 20 days. Now it's 40 days. The doctor's like, stop making waves. If you stop doing stuff, it'll be 20 days. Do you see the problem? Do you see the problem, Tiago? He, for some reason, and I don't know if it's Trump or anybody else, they can't seem to find finality. I want finality. I want to know if my leg is broken, if it's sprained, if it's got infested. I want to know so it could start healing. We won't know till we get all these decisions. And that's the only thing I'm saying, and that's the only thing I've been saying for the last 3 months. That's as far as I'm getting with my political discussion. I'm not talking about what they are, how they're going to affect you, if they're going to be good or bad, if they're pro-Trump or anti-Trump. I don't care, and I don't know, and it doesn't matter to me. I just want finality so that I could look at the x-ray and I could say, oh, now I know what we're dealing with. Now, based on everything you're showing me, it's going to take you 25 days, and you need this medicine, and you don't need a cast. Do you guys understand? I just want you to understand. I just want you to understand what's going on. That's all I am talking about. That's as far as I've ever gotten political with you guys. And I know a lot of people were like, "No, stop politics. Don't talk about I'm not. And I really don't care about politics. I am not a political person. I am the least political person in the world. I'm a financial person. All right. So You guys understand. So what about momentum levels? So we have fragmentation. The market can move from here. We have very little fragmentation. We have a market that can, I mean, if tech funds decide to buy, they're all together. There's nothing moving right up or down. They're all together. Problem is they're in the lower part of the range, which is bad. And you could see it right here. Look at the Dow. Look at the low on the Dow. Look at the low here. Look at the low here. See that? Now look at QQQ. Lower low. Dow, higher low. Look at RSP. Higher low. Look at SPY. Lower low. Tech, 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 tech. Silver lining is they will still all move the same way intraday. Okay, after the open. This is a really good session. I hope you, or at least it'll bring us closer to certainty. There'll be less surprises. And if then Trump starts going, I'm going to change my mind, all bets are off. So I need certainty. Okay, so look, we already went above this bar today. This is great. We need this to go above here. So today, folks, what you are looking for is the relationship between today's price action and yesterday's price action. And you want most of today's price action to bounce off these lows and be near the highs, or gravy would be taking out the high. You don't have to worry. I will be updating you all day long in all three of our Telegram channels on this. You don't have anything to worry about, okay? But be very, very cautious. But do know we do have congruency for the first time in a couple of months. Usually congruency happens as markets go down and they get out of whack as price goes up. Markets have been settling down last couple of weeks. They've been coming back to their normal basis. Okay. Let me, folks, is this helping you at least? Is this giving you at least some idea of sensibility of what's happening, what to look for, when to wait, so forth, so forth? Let me know. I just want to make sure this is helpful to you, okay? My job here is to help you, not to, piss you off. All right, 90-day low. We have 169. Yesterday, that number coming into today, that number was 289. And at some point on Monday, this number was actually, see how it was 287 and then it was 289. At some point on Monday, it got to 500 and then it went back up. And I actually send you we only have 169 now. That's not a lot. My problem with this is congruency won't hold if the question isn't answered. Yes, Jeff, that is right. We'll start doing this again. So we are moving in the right direction in terms of the downside. Problem is, folks, look, and this is scary. Look, yesterday we had 90 stocks here. Today we have 55. Or look at this one without ETFs, 51, 56, right? Now, this is the part you guys want to pay attention to. I know I talk a lot, but listen. Look, we went from 289. This is the part you're not going to get from Kramer, okay? Listen, we went from 289 to 169. Oh, Roger, you're saying we have over 100 stocks upticking from yesterday? Yeah, we do. So that means the up number should be higher too. It should, right? But it's not. Well, what does that mean, Roger? How can this number go from 289 to 169? But this number went from 56 to 51. How is that possible? How do you have 100 stocks less making 90-day lows, but you have less stocks making 90-day highs? Can anybody answer that question? It's a good one, Angie. Can anybody answer that question? You're not going to like the answer. How did we go from 289 stocks making 90-day lows to only 169 stocks making 90-day lows? But the stocks breaking up went from 56 to 51. Yes, but there's another way to answer that question, Boyd. But the answer is what Boyd says. Basically, people are closing their shorts. They're taking profits on their shorts, but they're not initiating longs. No, no, it's what Boyd just said. Jeff, what you're asking, you're saying why. I'm saying what. You're answering the question of why it's happening. I'm asking the question what is happening. No, no, no. Richard and you guys are all answering the question why. I'm asking the question what. What is happening? What is happening? We know why it's happening because of uncertainty, but what is happening? Can you guys go one step deeper? Yes, Tiago's right. It's not even big player. Forget about big players or small players. Players are not taking positions to the upside. They're closing their shorts, but they're not going long. Pretty cool tool to figure that out, right? Look at that. Didn't have to pay a penny for this. Been using this for 20 years. So we have better momentum to the downside, which puts us in a better area for this. Which puts us in a better area for us not making a lower low. But there's nothing biting to the upside. And that's a problem. That's a problem. So yes, who was it? It was a few people. It was Jeff, and yes, the reason it's happening is because of uncertainty. I couldn't agree with you more. But what is happening is mechanically is folks are, and I don't want to get into big institutions or small institutions because it doesn't really matter. Investors, traders, institutions are taking the money from the downside, taking profits from the short side, repositioning, but not putting money into the long side of the market. So what it's telling us is that people are putting their money flight to quality, which happens to be almost at the 200-day moving average, which happens to be right about here. I don't have it on here, but here, I'll show you the other chart. You could see it here. See? Right above us. And we got a triple high right here. So the 200-day is becoming very, very important. By the way, once the bond market goes above the 200-day, assuming we don't have this much uncertainty, we have more stable conditions, that will start a deflationary market cycle. All right. Carlos says, what did Carlos say? Carlos says stocks are hovering amongst the closed range. Yes, choppy. Cash, money. All right. So you guys seem to have understand it. It means where are they putting their money? Bonds, cash and bonds and foreign assets. Bonds. Look at bonds. Look at stocks. My dogs are going crazy again. Sorry about that, folks. All right, guys. Now, before I do my stocks that I like for today, how about you guys give us a couple of thumbs up? I'll give myself a thumbs up. All right. We're having a good session. Just click this link right here. It helps drive our show higher up in the rankings. Okay. All right, let's talk about stocks that I like. How about I use TC2? How about I just use TC2000 since we're already here? I hope you guys don't mind. It shouldn't make much difference. This is 5 minutes. This is daily. I would only be looking right here on the left side. I'll start with the short side first. Only look right here. Only look right here. This is This is overnight. This won't tell you anything. Right here. Here's where the money is. Very nice chart. Coming up to the 8-day EMA. Very nice. COO. It's a line to the downside, assuming we break 79.40-ish, assuming we break this price area right here. Only look at this chart. This is just overnight crap right here. ALGN, Align, beautiful company, beautiful chart, beautiful pattern. Again, you got a nice setup right here to the downside. Very nice. Actually, I'm going to tell Matt about this one. It's a nice looking chart. Beam. This was very resilient. This stock has had a lot of trouble going up lately. That's all. I'm going to leave it at that. IMVT. And by the way, you could see the sector right here in case you're interested. Right here, you could see the sector and the healthcare sector, biology. You could see it right here. And you could see it right here too. STX, tech stock breaking down. Seagate, I'll be looking at that today. This was a very popular stock back in the 90s, by the way. Got a nice descending triangle. There we go. VRNT. Look at this. Nice chart, nice graph coming up to the 8-day. High volume bars right here. Look, every one of these bars, real selling pressure. No monkey business. Real selling pressure. All white. Nice stocks to the short side. Real nice stocks to the short side. ILMN. A lot of healthcare stocks, folks, but I'm picking you the best ones. TMO. Also healthcare stock. A lot of healthcare stocks breaking down. A lot of healthcare stocks. And I really liked Merck yesterday too. It has to break this level here, but I really liked it yesterday. Then they're back up to their 90-day highs. CJ, but they're not back to their 90. It doesn't take a lot for them to go back to their 90-day highs. And by the way, 50-day highs I look at 50-day highs too. And I look at 20-day highs too. It doesn't look all that great. There's clearly no money coming into the upside of this market. Because I wanted to trade to the upside yesterday because market was going down and it was overextended to the downside. I couldn't find one stock to the upside. You guys know I'm looking at stocks all day long. Let's look at mega caps again. Still breaking down. But we haven't broken this low. That's the key. Watch this low. Watch this low. QQQ. Still haven't broken out. Still in this triangle. Here, let me do something for you guys. Let me post this for you in the main Telegram channel, okay? I'm doing everything I can to help you guys become better traders. And I think it's actually working. Okay. Just posted it for you, okay? With the pictures and everything. Let me see how Matt is feeling. And if he has COVID. Sorry, guys, I'm just talking to Matt. And I'm not in a rush today because I don't have to go anywhere. Now, let me give you stocks to the upside. And I don't like a lot of these. They're not looking all that great. DRI, CVX. I do like this one. I do like CVX. ACI, Otis. Not today, I don't. Not this. Nope. Roll. That one looks good. Hess, energy stocks. Waste management looks really good, actually. And if you like garbage stocks, RSG is good too. AGI, basic materials. That's a gold stock, AGI. So you got gold and energy stocks. And Sigma. Sigma still looks good, but Sigma, I would be careful. I don't like stocks that are going up just at the 200. I like them above here. So I would be cautious with Sigma. I would be cautious. All right, folks, let me give you some links, and then I will send you on your way. Don't miss my class. I'll be having a day trading class at 10 a.m. today. I'll be in the VIP room talking about some really cool educational stuff at noon today. And if you guys need clarity, answers, feedback, you guys got customer service live. Cam, Gustavo, and hopefully the Boberman will be there. I don't know. Let's see what he said. No, he hasn't responded yet. Oh, he sent it to me at 8:23. I'm just seeing it now. I'm going to call him right now. I'll let you guys know. He'll be in at noon in the VIP room as usual. Have a great day, everybody. If there's something that I did not mention, you can email me, roger@rogerscott.com. I don't have an update on Matt, but he Skyped me at 8:30, so probably just a cold. Thank you for all the thumbs up. Thank you for the feedback. I will be updating you throughout the day. Folks, we have to be very, 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 very careful today because we have absolutely no idea what President Trump is going to say at 4 o'clock. If you want to rewatch this video, here's the link for it. And have a great day. Thank you. Thank you for being here. Bye, everybody. Bye. Have a good day, everybody. Please be patient. Be patient. The word on the street today is patience, and I'll be the master